Have you ever wondered what the smartest money in the world is doing while you're busy chasing the latest tech stock? I'm talking about the central banks, the big kahunas who control the entire financial system. They're supposed to be predictable, steady, and frankly, a little boring. But right now they're doing something that should make your ears perk up. They're buying gold. Not just a little gold, mind you. They are buying it by the ton, at a pace we haven't seen in decades. This isn't some small-time operation. This is a coordinated global move. The big question is, why now? What do they know that you don't? Let's get one thing straight. Central banks are not hedge funds. Their job isn't to make a quick buck. They are the guardians of their nation's financial stability. They manage their country's currency, control interest rates, and act as a lender of last resort when everything hits the fan. When they make a move, it's not a speculative bet. It's a calculated decision about the future of the global economy. Their actions are a signal, a giant flashing neon sign that something fundamental is shifting beneath our feet. So, when you see these institutions quietly stacking up physical gold bars in their vaults, you have to stop and ask what they're preparing for. For years, gold was considered a barbarous relic, an old-fashioned asset that didn't pay interest or dividends. The smart money was supposedly in government bonds, in currencies, in the complex financial instruments that power our modern world. But that story is changing, and it's changing fast. The shine is coming off those paper assets. Central bankers are looking at their portfolios filled with US Treasury bonds and foreign currencies, and they're getting nervous. They're looking for something real, something tangible, something that can't be printed into oblivion by a government trying to solve its problems with a money machine. And they've found their answer in the oldest form of money known to man. This trend isn't isolated to one or two countries. Look at the data. China, Poland, Turkey, India, and Singapore are leading the charge, aggressively increasing their gold reserves. These aren't small, unstable economies. These are major players on the world stage. They aren't buying gold for a quick profit. They are buying it for protection. They are buying it as insurance against a system they themselves are starting to doubt. They are diversifying their holdings, moving away from assets that depend on the promises of other governments and into an asset that depends on nothing but its own physical reality. This isn't a trade, it's a strategic retreat to safety. So why is gold suddenly looking so good? To understand that, you have to understand the growing fear of currency devaluation. Think about the money in your wallet or your bank account. It's just paper, or more accurately, just digital entries on a computer screen. Its value is based entirely on the faith we have in the government that issued it. But what happens when governments start printing money like there's no tomorrow to pay for massive debts and social programs? What happens when inflation starts roaring, eating away at your purchasing power every single day? Your money becomes worth less and less. It's a silent tax that punishes savers. This is the nightmare scenario that keeps central bankers awake at night. They see the unprecedented levels of government debt around the world. They see the persistent inflation that politicians and economists swore was just transitory. They know that historically, when a country gets into this much debt, there are only a few ways out, and none of them are good for the currency. You can either default on your debt, which is a catastrophe, or you can inflate it away by printing more money. Gold, on the other hand, can't be printed. Its supply is finite. It holds its value over centuries, acting as a reliable store of wealth when paper money fails. Look at US government bonds, long considered the safest asset on the planet. For decades, foreign central banks loaded up on them. They paid a steady interest rate and were backed by the full faith and credit of the United States. But that faith is starting to crack. With US national debt spiraling past $30 trillion, some countries are getting skittish. They're asking themselves if holding all that US debt is really as safe as it used to be. Gold doesn't have this problem. It has no counterparty risk. A gold bar in your vault is not someone else's liability. It's a pure asset. It's yours, and its value doesn't depend on any politician's promise. This shift is a massive vote of no confidence in the future of fiat currencies. When the very institutions responsible for managing those currencies start trading them for a yellow metal, it's a powerful statement. They're essentially admitting that they see a future where the dollar, the euro, or the yen might not be the reliable bedrock of the financial system they once were. They are hedging their bets, preparing for a world where financial trust is low and tangible assets are king. This isn't just theory, it's happening right now, in vaults from Warsaw to Beijing. They're swapping paper promises for physical certainty. There's another huge piece to this puzzle, and it has everything to do with power and politics. For the last 75 years, the US dollar has been the world's reserve currency. This means that international trade, from oil to coffee, is priced and settled in dollars. This has given the United States an incredible advantage, what's often called an exorbitant privilege. It allows the US to borrow cheaply and wield immense financial power. But this dominance is now being challenged, and gold is a key weapon in that fight. Countries are actively looking for ways to depend less on the greenback. Why the sudden urge to de-dollarize? It comes down to risk. When you are completely dependent on the US dollar, you're also vulnerable to US foreign policy and sanctions. We saw this play out when sanctions were used to cut off countries from the global financial system. For nations that might find themselves on the wrong side of Washington, this is a terrifying prospect. By holding gold, they have an asset that is outside the US-controlled financial system. It's a neutral reserve asset that can be used for international settlement without needing permission from anyone. It's financial sovereignty in its purest form. This isn't just about adversaries of the US anymore. Even allied nations are growing uncomfortable with the dollar's overwhelming power. They've seen how trade wars and geopolitical tensions can disrupt supply chains and financial markets in an instant. They want to create a more multipolar world, one where no single country has the power to turn off the financial spigots for another. Building up gold reserves is a crucial step in this process. It gives them a seat at the table and reduces their vulnerability to the political whims of another nation. It's a strategic move to rebalance the scales of global power. Think of it like this. For decades, everyone had to use one specific highway, the US dollar highway, to get anywhere in the global economy. Now, countries are building their own local roads and bypasses. Gold is the pavement for these new roads. It's a universally accepted form of payment that operates outside the traditional system. The more gold these countries have, the less they need to use the dollar highway. This is a slow, methodical process, but it represents one of the most significant shifts in the global financial order in our lifetime. They're not just buying a metal, they're buying their independence. Let's put it all together. Central banks aren't just buying gold because it's pretty. They are buying it because they see a convergence of massive global risks on the horizon. They see a world drowning in debt, with governments that have no realistic plan to pay it back. They see geopolitical conflicts flaring up, threatening to disrupt trade and energy supplies. They see instability in the banking sector, where the failure of one institution could trigger a domino effect across the entire system. In a world filled with this much uncertainty, gold is the ultimate safe haven asset. It's the financial equivalent of a storm shelter. This is not a gamble, it's the opposite. Central bankers are, by nature, the most risk-averse people in the room. Their job is to prepare for the worst-case scenario. When they hoard gold, they are telling you they believe the probability of a major financial or geopolitical crisis is rising. They are battening down the hatches and preparing for a storm. They hope it doesn't come, but they are getting ready just in case. They are looking at the landscape of paper assets, sovereign debt, and complex derivatives and concluding that something solid, something real, is the only thing they can truly count on when things go wrong. So, what does this mean for you, the individual investor? You need to pay attention. When the people who run the financial system are preparing for a crisis, you should probably think about your own preparations. The massive gold buying from central banks is a canary in the coal mine. It's a signal that the underlying stability of our financial system may not be as solid as we've been led to believe. It suggests that the risks of inflation, currency devaluation, and geopolitical conflict are higher than what you're hearing on the evening news. It's a warning shot, fired by the smartest money on the planet. The bottom line is this: something big might be coming. The central banks of the world are not acting on a whim. They are making a deliberate long-term strategic shift in response to a world that feels increasingly fragile and unpredictable. They are quietly building a lifeboat while telling everyone else that the ship is unsinkable. The ultimate question you have to ask yourself is simple. If the guardians of the global financial system are preparing for a storm, are you? Or will you be caught out in the rain with nothing but paper promises to keep you dry? Don't say I didn't warn you. Booyah.